there was a couple questions actually about the specifics of how to enter orders. We can talk about that. And then if you guys have anything else you want to talk about, just pop it in the box there and we can go through it. But so we've had a slow go of it since November 19th, right? Had a few things really trigger. And, you know, that's a function of, it's just, you know, Thanksgiving and the market slows down, people go on vacation, and things don't happen the way that we're used to them happening. So I would assume that probably tomorrow we're going to start seeing things get back to normal again, but, you know, I ain't promising either because there's bad weather back east, and, you know, let's just see if people get back to business. So yesterday, like I said, today was the biggest travel day of the year, so that told you that, you know, Monday was going to be slow. Tuesday wound up being slow as well, and all eyes on Wednesday. But I had questions about setting the stops, so I just thought, you know, let's go back and, you know, do some stops and figure out some. Just grab a tool here. Draw some stuff here as well if we need to. So back to the setups for the 19th. If I'm looking at my chart and I'm trying to figure out where to set a stop, my bias on these XRVs is always going to be to set the stop wider than it's going to look on a NYSE security. So something is scaled very strangely here on. Let's do a new chart. Bear with me for a second. Just going through Realtick with Eric, and I think that some of my settings got messed up. Let's go back to the 16th. Do this again. Okay, so, you know, as I'm looking at these, what I'm really always focusing on is where is the last real, you know, major support and resistance of the day. Where can I anticipate that if things are going to go against me, they're going to wind up imploding, right? So here's the support line that I would see for this. Now that's more of a target. That's where I'm expecting the bounce. So I'm going to go down. I would have it stop down around 70.92, right? And that's based then on an entry up in the range at 71.79. And then the next day, the first thing that I'm going to look for is the opportunity based on like the first 5 minutes of trading or so, or the first maybe 10 or 15 minutes of trading, if it settles into a range, I'm going to be looking for a chance to move the stop up into this range, about 71.44. So my initial stop is going to be wider. That accommodates the swing in the market around the open. And then I'm going to want to see, based on the open, whether or not I have a test of this more desirable stop. If I do, then I wind up just grabbing my line and pulling it up and getting the stop up tighter. KLAC. Okay, same thing. My hard stop on this is going to, can anybody hear me? Because I just got a message from Steve saying he can't hear me. Okay. So Steve, check your, well, let's tell Steve. Okay. So again, on KLAC, it's going to be the same situation, right? I'm looking for where do I think price would have to violate in order for, you know, something to happen. So what do I think is going to happen if price gets down through this line, right? The most likely thing that I see happening here is that, you know, if we break this level right here, we're going to see a move back down into this range somewhere. We're at least going to test this, and then we're going to test this. And, you know, we don't want to be a part, really, of those tests. So that is going to get us into that first swing of the morning. Then if this level holds up, the next place that I'm going to look for an opportunity to move the stop is back up into this range somewhere. Okay, so, you know, a 97.70 entry with a, you know, a dollar stop is not where any of us want to be. You know, Goran and I have had this conversation a billion times, but on the opens on these, it's important. So some of you have been sort of shying away from the first 5 minutes on these, and that does get some of that volatility out of the way, and it puts you more in the position of like the stocks to watch setups where you can go and, you know, base your stop loss on what's been happening. And, you know, if you want to do that, if you want to avoid the first 5 and get out of the way of the volatility, you know, by all means, you can do that. Just understand that, you know, one of the side effects of that is then you're going to wind up missing some trades. And if they go in your favor, right, a lot of them tend to go right out of the gate in the morning. You know, WPC, you know, I would have looked at this one, and, you know, initially I would have had a stop all the way down here. About, you know, 67.78, get me under that range, maybe even a little bit further. And then, like I say, in the morning, we're going to want to, you know, see if it triggers us in. Can we get the stop up more into this area? Because this is going to be the test, ultimately, then, of, you know, the morning's range. But we need to see what happens in the morning in order to figure out whether or not we can move it. Right, at least that's the way that I'm trading these. And the same thing on Xilinx then, you know, initial stops, you could be down here. You could also, you know, realistically, you could be up in this portion of the range, 90.11, you know, and then you've got an entry, 91.19. Right, 90.11 is a kind of a make or break area for it. Maybe even a little bit higher. You could, you know, just looking at it here, you want to see what the volume by price data looks like. See, if you break this level, then you're really getting down into a part of the move here that was getting pretty thin. Pretty likely that you're going to get jammed right back down into that range. If you go up here, you got a tighter stop. The only thing is, you know, you got a very high probability that you're going to get a bounce right here. And, you know, you'd rather get taken out after the fact, right, after it gets down through this volume. You know, in my case anyway, I'd rather have that stop initially be such that it's going to get me through as much of a swing as I can get through. So if we bump this out then a day to the trade day, all right, we see what happens. So this stock never managed to get us in, and look what happened when it got through that stop level, right, that we had set. It took off. It did exactly what we expected it to do. Same thing here, right? This one opened, never got up to the trigger. There's been a lot of no trigger days on these, so these have been boring for the last you know, week and a half or so. But that's, like I said, that's all got to do with, you know, thin holiday trading, and things are going to get back to normal, and then we'll have our hands full again. But you know, same thing happened here. Look what when it got into our stop range. All right, this is not magic. This is just a solid place to put a stop. It gets down under this business that it did up here, never triggered us in, but look what happened. This is how you can go through and just look at your charts every day and try to figure out, are you setting stops that make sense? So, when you see a reaction like this to something that you planned, then you can say, yeah, I put my stop in a place that the market definitely reacted to. Look what happened the first time. Look what happened when it came back up and tested that stop area. That was a significant point in the price activity the day before. KLAC, same thing, no trigger, but, when it opens, it hits our stop level, crashes down through, comes back up, tests the stop level again. Same thing, big move to the downside. Right, and this is the case for a lot of these things if you set those stops in places that make sense. Look what happened on WPC. Right, so this one opens up, right? Our order on this would get us in to this trade based on the fact that it came back down into the range, right? So we've actually got 68.62 up to 68.82 would be sort of the acceptable spread on this, because really your trigger on it would be your standard trigger. If you've been following the the boot camp stuff and the around the horn stuff, you're really looking for this to be trading 68.72 in order to trigger you into the trade. It's just you're using 68.62 as the qualifier, right? It has to be trading between these ranges in order to activate, and as long as it's trading at or below 68.72 in the morning, your order goes live and it's going to get you filled up to 68.82. This comes up and it came within a penny of that pivot line. So now Eric was asking the question, and it doesn't come up frequently, and actually I'm surprised because it is a little bit of a thing you have to wrap your head around is, why are the guys trading the XRVs, why do they get out before the target, right? Why are they not waiting for that absolute move to the target? And it's because what we're expecting to see happen is when the price hits our target, it's going to reverse. It's going to pop back in the other direction again. And if we put our actual exit price, a penny, 2 pennies, 3 pennies, 4 pennies, whatever, from the target, then what happens is as it's moving to the target, we get picked up in the order flow instead of when it's reversing from the target, right? So you have an offer out there to sell the stock while people are still buying, essentially, is what you're looking for here. Whereas if you put your number right at the target, then you're going to be offering that stock right at the same time as a bunch of other people are putting that stock out there, because there's more than just us who are using these pivot lines as support and resistance levels that they want to see something happen at. Let's check my chat real quick. Okay. So that is the way that I had set up those trades on the 19th. And then right for the rest of the week, I'm going through and I'm doing very much the same thing every day. I'm looking for, where do I see signs of a violation that will, that'll kick me back up into a range in the case of a short. Right, I'm always trying to figure, in the case of something like this, what you could do is, you'd use this bottom part of the range here. You don't have to go all the way up into these tops. So sometimes I'll look at, okay, how many times did something inflect there, and then where did it manage? So what we're looking for is a move down below here that is going to get a short. And when I look at this, what I see is, okay, it stayed down below here until it got to this support and resistance level, and then over the course of the rest of the day, right, the real level is like right here. But again, we want to go just beyond that and give it, it's got to test, right? Because when it gets up to this level, what we expect is it's going to bounce. When it gets up through this level, then what we expect is that just like it did here over the course of the rest of the day, it's going to stay up above there. CDNS, you could have your initial stop up $43.47, and then where would you be looking to move that? if the market starts going in your favor. I would immediately be eyeballing, this level down here, so that if in the morning it triggers me into a short and it stays below this line, I'm going to ratchet my stop, pretty quickly in the morning down to this level. HRTX, right? My Santa's helper profits or stop loss would be around there, but my stop that I'd be planning initially anyways would probably be up in here, 24.9. One or so. And you always want to keep an eye on, if you have volume by price data, keeping an eye on that is good practice. I'm trying to figure out how to find that data for a couple of you who don't have market profile on your software. I haven't had much luck so far. I'm talking to, more people at these brokerages than I care to talk to sometimes, but it'd be interesting to see if we can just find a third party out there that has like some free charting software or something where you guys can see this plotted this way. And you can see what I'm looking for, right? I've got so right here is sort of the make or break line. If it gets up through there, right, it has to get into this range before I'm expecting it to start moving back up through here. And really, this volume here is what contained it as it was moving lower. And then if you really want to put your boot camp hat on, you can go get yourself a VWAP and just say, well, all right, what was my VWAP for the entire session? And look at that, right there at that support and resistance level that we were talking about. So I was just on the phone with Eric, and we were going through some of this VWAP stuff, and we just picked a symbol, and I said, all right, well, if you're looking to do a switch hitter retracement, and you're watching the move as it's happening, where would you put your Fibonacci reversal if you were drawing your fib study, right? And it's going to be amazing how many times your fib retracement of your major move happens to line up exactly with the volume weighted average price. So the next day now, if we were looking for a retracement of that move, we would be looking for a move back up into that VWAP range. That confirms, right? That's confluence. We talked about this at Bootcamp Forever. You want to see multiple things overlapping, and you just sort of want to think about them naturally. Write this stuff down and give yourself a list of things that you're going to be looking for in terms of confluence, now when you're starting to trade these things. And those of you who have been around this stuff for a while, what you should be doing is just naturally thinking, all right, I see a trend move. I see a peak and a trough here on the trending move. Gives me reason to think I'm probably going to have a fib retracement. Gee, I wonder what the VWAP is of that move. Does that overlap with what's going on? Because I know that if it's been a downtrend all day, right? If I see, a chart like this where, if Connor can come into the room and Connor says, hey, Daddy, that's a downtrend. I know what I'm looking at there. If you can see the trend and it's that obvious, then the first thing you ought to be asking yourself is, where in here was the majority of what was going on taking place? And that volume weighted average price is going to be the thing that gives you then, the best indication of where it's going to bounce again. If it gets back up into here the next day, right, if you're looking for an early entry or something, this is the place you're going to expect an inflection. Team, right, whoops, same thing, we're going to go, all right, and draw. So, here is where we'd like the stop to be. And then, initially anyway, we're going to want to give this thing some latitude up into here. So that's the way I'd set them up for the day. And then, of course, the next big consideration is what's the market do the following morning, right? So when you get up and you're looking at the futures and you're looking at fair value and you're looking at the implied open, I've said a bunch of times, it's really sort of 160 points in either direction is the sweet spot to still have these set up for the morning. But I think sort of anything beyond that, and I start to worry that they're going to get sucked into the gap. They're going to get pulled on an overly directional gap, and then we're going to get triggered in. And then what's going to happen is those big 300, 400 point gaps. What they tend to do is open, trade there for a few minutes, and then trade back into the range. And then what happens? You get stopped out of all this stuff. So the next session, okay, you've got, this one, unfortunately, in the first hour of trading, you're not going to, I could just tell looking at it, I don't remember what happened last week anymore, but I can tell looking at it that, this is going to be too big of a spread to catch our move, right? We're 20 cents, this is 30 cents, plus it would have to print in between there first in order to get us the order in the right direction. Would have been beautiful, didn't happen, so that's team. ACIA, this one gets us in, and then, so here's another question somebody had. So, look, so it's coming up. Your first test in the morning tells you this stop is still valid. So you were asking about how do you know when to move a stop? Now, for some reason, our Santa stop isn't here right now, but you remember where we drew it, right? If you see this kind of a move, you're very frequently going to hear in the room, Goran's going to say, look, this thing's coming up, it's testing, and I'm looking for an entry opportunity. Or I'm going to say it, or, usually it's not Julie, usually it's Goran or me who's talking about these trades. My entry on this, my ideal stop, right, was going to be on a violation of this range. It's just we didn't see any reason initially to put our stop there. We wanted to test this one up here. When the first few bars are in, our stop makes sense. That's where it tested. Then it comes down. We see another set of tests, and look where it lands, right at that level where we're saying, all right, if it gets up through here, it's going to wind up heading back up into the range. So once you see that there's been a test of that area, that's when you go and pull that stop down. You haven't even been triggered in yet, right? But this is when you want to pull the stop down. Or what if you got triggered in on its way up through here? What if it got up to the criteria price, dipped below, and then kept heading higher? I caught some of you at boot camp, just bailing on your trade, somewhere here in this range for no reason other than you didn't want to lose money. But if you stuck to the trade, right, even if you got triggered in here, which you didn't want, right, which was rough because it was going in the wrong direction, comes up here, never stops you out, reverses lower. Now it gives you the reason to pull the stop down. And then, why are you moving the stop to break even? So this is another one of my friends is asking me, this is something that's causing issues. It's all right, if this was your entry price and the stock goes and it trades down, it's down just a little bit beyond 50% to the target here. Okay. What is the rationale for saying that a break-even stop is here and not here? Because that's break-even, or that's where your order started, and that level up there is something else. So the reason that you can use break-even, you can use the absolute break-even price certainly, but what's being questioned is well, why are certain of us putting these break-even stops in different places? For me, it's that I know that yesterday's closing price is going to be a key inflection for this thing, especially given all the volume that happened yesterday's close. So I'm willing to go up a couple pennies into yesterday's range if I can find this kind of a this kind of a little plateau here, then I'll just go and pop the stop in there. Or if we didn't have the support and resistance in that closing range, maybe I'd be looking at, okay, well, do I want to give it room, up into 77? Absolutely. If what you want to do is use the hard break-even number as your stop, you can do it. Just be prepared that if it gets up above and in the first hour trades back down through again, that you're probably going to want to take that second entry. Hopefully that clears it up. And then why sometimes, this was another question that came in, why sometimes, let's say that 50% was really like here, right? Why are you moving the stop if it's 2 cents from break even? And that's just a matter of watching what's going on in the morning. And if it messes you up, use the absolute. I mean, I'm not even putting in. It's not like the around the horn plan where I'm saying the absolute 50% to target level is here and don't touch it unless it does it. This has to do with we're watching what's going on in the morning. We see it come down here, it bounces. We see it come down here, it bounces. Well, if it didn't get exactly 50% of the distance to the target, and I say I'm going to pull my stop down, it's just because I've seen it pause in the same place twice. I've seen it hesitate in the same place twice. I'm 2 cents, I'm 3 cents from my 50% level. Well, I'm going to go and pull my stop down, and then if it gets back down through the entry, I'll take it again. Here's ALXN. Okay, here's an example of one. Here, Eric, you were asking about, okay, well, what happens if it gets you in and then stops you out? Here is one that there was no move on anything here that was warranted. Okay, you had an entry. It's not even one of these crazy entries that happens in the first 5 minutes and clips you or anything. This is just, plain and simple. It came down. It hit my threshold line, right, from above. It got down to 22. That's like the whole thing is, everything about this says you should have been filled. I wanted to be filled here. And then when it reversed, I had no reason whatsoever yet to pull my stop down any lower than where we had it the night before, because we've not seen any kind of intraday support and resistance that happened beyond here. As a matter of fact, what we did see was that this stop contained price initially, and that when it came back down again, what we could expect was if it hit that 114.01 level, at the very least I would be expecting to see a move back up to 115.33. And in this case, right, it pauses there for a couple seconds, and then whoosh, look what happens, straight up and off to the races. CDNS. Okay, get a 42.66 entry on this one. Kind of a no-brainer, right? It made it down to 41.84, which was just shy of that pivot line. You would definitely want to be back out of this again if it comes back up. On the first entry, you're getting taken right out, and then on your second entry, right? If you had your stop here on your first entry, you're gone. If you left your stop like up at 92, or let's say you brought your stop down into here, then it kept you in for this second swing. But in any case, the second one too, 50% to the target at least, right? And then it reverses, and really when it gets back up, once these bars are in, if it's me, right, I'd be putting my trail right there. 42.75 would be the level that I'd be using as break even. I wouldn't be using 66. You can use it. You can absolutely use that number if that helps you, in your head, rationalize why you're doing things. I'm just saying I'd rather see, all right, well, last time it came up here, it got to here and reversed. Maybe I'm going to give it a couple pennies above there and just see, does it reverse again? HRTX. Okay, here's the $24.02. It's the baseline there. And then we would want to go down to 2392 is our criterion. 2382, the worst price that we'd accept. So in this case, right, what should be happening here is stock opens way down here, doesn't qualify, gets back up into here. This is assuming you didn't, just decide I'm going to kill this order because it's a big gap or something, or I'm just not going to trade today. But let's say you deferred the order because of a gap. As it's moving back up through here again, right, when it gets up to your threshold price, usually you're going to say, I'm going to uncheck my deferred order. I'm going to let that thing, trade me through. And in this case, right, it would get you in probably $23.82. You probably would get the slip on this one. And then when it gets down a few pennies from your profit objective, it reverses. This is 6 cents. I can tell you right now, I would not have had my exit order live at that point. I would have probably had it at 23.17, 23.18, something like that. So it would have missed me the first time around. Am I pissed? No, I'm not even looking at it. Right? All I want to see is what happens next. So I've got my stop, up in here at that point, because if I'm going to move this, I'm not going to move it into here, because at this point we've contained a whole lot of a day under here. So I would just put my stop just right up above those highs and say if it violates those, then I'm out. And then over the course of the day, it tracks in and winds up at the target. And then an XST, right? This one didn't do the fib move that we were expecting, didn't do any of that stuff at all. So a lot of times, right, best plans are just gonna shake out a different way. This one opened the following session down out of the range. You would not take this trade. 73.41, worst thing you'd be looking for was 73.21, and the best thing that it did, $73.17. So no dice, right? It would have had to get up to 73.31 to hit my qualifying level again, and then when it reversed down through, could have picked it up. I know that, a little bit of confusion in the room last week because we took this as a discretionary trade, and that kind of thing always messes with people, but we just like to tell you what we're doing. I think Goran took it too. That was based on this, right? So when it goes and it tests this level, bounces lower, and comes up and tests it again, that's a real low-risk way to set up a discretionary trade on something like this. So if it comes up here and it hits this level again, where we saw it inflect, get short, and then if it goes up even, 10, 15 cents above there, it would just get right back out again. So some of you have been very uncomfortable with the notion of this 10-cent scratch stop, and you'll see Rick use it, or you'll see Julie, use it on things, and it's because what a lot of you want is a blanket rule. You want a rule that you can apply to everything, and there's no such thing. So when we're looking for an entry, and it's going to be a 10-cent stop, or Julie says, you know what, we're just going to give this thing no wiggle room at all, we're going to see what happens. It's because we already saw it do something there once before, right? Or it's like right at a pivot line, and you see, Ristow does those pivot trades, and he's got a real tight stop on the other side of it. It's because if it doesn't do what we expect it to do right away, then we just want to get out of the trade, right? So we have every expectation that after this thing did this, that the next time that it gets up here, it's going to do this. So that gave us a good reason to be in the trade. If you didn't do it, just keep that kind of thing in the back of your mind, and then next time around, you know what to look for. Don't take it the next time, just watch it, and then watch it again, and then watch it again. And when you're so comfortable with making the decision about, all right, this is going to be a 10-cent, this is going to be a 10-cent discretionary trade. If it goes against me, I'm out. If it goes in my favor, great. But I'm not going to cry over spilt milk if the thing winds up, reversing me out for a 10 or a 15-cent loss. Sooner or later, you're going to be seeing these things in that kind of a light where it makes sense to take the discretionary trade with the tiny little stop, and then other times you're going to look at something and say, you know what, if I take this discretionary trade here, yeah, I've got a likelihood if it gets back up into here again from below that I'm going to see a bounce down lower, but I can't really use a 10-cent stop, based on this, right? I've got to give it, now more of the day has sort of unfolded, and I've got to give it back up into the range, right? And I got to figure out where is something going to unravel if it happens. Well, now, you got to stop up above this line. So, the early inflection, usually the best. The sharpest inflection is always the best, right? If you see something like this where it comes up and then it really gets rejected, then you can expect that the next time around you're going to see the same kind of thing again. If you see this, where you get sort of a move lower and then a consolidation and then drop down, then you're going to want to go and vet this thing a little bit further and decide, can I really put a 10-cent stop on this, or am I going to have like a 30-cent stop on this entry, and is this really valid enough, a reason to be getting in here based on these two little tops, and what else can I do to figure out whether or not this move to this profit target was likely. And again, you guys have been to boot camp, right? So you should be immediately thinking about looking for your VWAP, right? So your volume weighted average price from here down into the trend was here, and then looking at your period VWAP, right? Where is it when you're making this reversal decision here, right? Because you're looking for these inflections here, right? So it's back down into the range here. And then what would be my retracement on this move? Oh, see, now I see this was a 618 fib retracement. So now when it's coming back up here again, right, I'm thinking, is it going to be a 618 fib retracement again? If these VWAPs would have been up closer to here, then I would absolutely expect that this trade was going to be a good one. Forget what happened afterwards. Forget that it went up to 30 cents. Would I be setting up the trade is the question, and the answer then would have been yes. Based on the fact that this stuff is just sort of all over the place, I don't really have confluence. I don't have that real good idea about what's going to happen next. Let me take a look at these questions here. Yeah, so nobody's got a good explanation for me today about what's going on with Connect or with Adobe. So they just sent a notice saying that people are having audio issues. So just bear with it, and hopefully it'll be in the recording, right? That it's not breaking up on the recording as well. In terms of getting them at the inflection or on the way to, it's the same thing, Steve. I just put I'm putting my entry price, my short sale price is going to be a penny or 2 pennies below where I'm expecting that inflection. I want to get popped into the trade as it's moving to the place that I think it's going to bounce, because when it hits the bounce point, then I'm going to expect that when it comes back down again, it's going to leg lower pretty quick, that we're going to see the spreads on the left side of the montage are going to start widening up. The bid side spread, the spread between levels, is going to open up, and it's going to be harder to get a decent fill. Whereas if we get filled on the way to where we think it's going to bounce, we're going to get filled, right where we want to. It's going to be a 2-cent differential between where we want to get filled and where the thing ultimately bounces, right? And then we get to participate in the move lower without already being 10 cents underwater just from getting into the trade. How are we doing on time? Let me move ahead to tomorrow's setups. So you can see here Just going to do sort of the same exercise. I'm going to look on at home. So ATHM, this one is a NYSE security. This is going to be a little tighter on support and resistance, although it's an American depository receipt. So those tend to swing around a little bit. So we could either go 80.24 originally, initially, or we could look down in the range, 79.97, and ideally, once this starts trading, assuming we don't have a bunch of gaps tomorrow, we're going to be looking for the stop to move to 80.62 very quickly. So, these are sort of the places that we'll be looking at initially. Right out of the gate, if it doesn't swing down into this range, I'll pull that 97 stop up into this 28 range for sure, or 24 or whatever it was, just down around where it captures all of what happened up in here. Dave and Buster's. Again, and then you should look to have I don't have the exchanges on the nightly thing, right? I give you the exchanges. So when you see these things that are NYSE, right, you can look and you can start tightening up the stops a little bit as compared to the NASDAQ. So, on your NYSE guys, you can, 56.28, or you can go, loose initially up into like 56.57 or even above these highs. I'll take a little closer look at this a little later, but, your entry is really based on this 55.84 violation. And, what you know from looking at how it's been trading today is that if it gets up above this 56.28 level, then you really have a very high probability of a move back up into this range. So, in this case, it's going to be a tighter stop for me than normally it would be. I'd like this, 56.28 level. It doesn't really have a move into the closing range that you can quantify so well, right? Because, this move here, it's obvious where the VWAP is going to be, right? Your VWAP into the end of the session is going to be right there. Your bigger trending move is going to be way up high on you, just because so much of what happened over the course of the day happened in here. So tomorrow morning, it's really going to be a matter of seeing, does this... does the sell side pressure reassert if it gets down under that 55.84 level? But in any case, I'm going to use a tight stop on this one. G3, the biggest portion of the move over the day happens from this point to here, right? This fall off in the morning is really, this is the open. This is where it's stabilized. It's where it started trending from going down into the close. Ideally, I'm going to want to see my stop get down, pretty much under this, into this level right here. But that's after what we see what happens in the morning. So, first thing, we're going to go and, whoops. Pretty much, I'm probably going to keep my stop up around, 39.17 initially. If it gets up into this range, then, I'm going to assume that it's going to go and chew through part of this. This one closed on, big volume going out. So, let's see, there's a ton of volume by price right there. Obviously, this was a big block order probably to buy this thing. So it could even be the case that we don't get a trigger at all on this. They might have got it done going out based on this and this piece of information here. HSIC, long side of the market. Right? Not crazy about the longs right now in general, but this one managed to buck the trend. Don't know what just happened there. 86.67, probably where I'm going to put my stop on it initially. And then if it gets me in, where's my, right? My wish list stop, right down in there, about 87.11. So if we see it open flat, if we get an inline open on this one and then it bounces around on this support level that it was at today, then we're going to look and see if we can't, pull that stop up behind it. So there's quite a few of them for tomorrow. LGIH, again, my happier stop is about 45.29. Opening stop on this one, I'll get down under this range here, so under 44.83 somewhere, so a couple pennies down. It's going to do it, right? Because I assume that if on the open it comes and it swings into this range, so this range I'm assuming is going to hold because, this right here is some pretty good support and resistance. But if it gets down under, under this level, then, look out, it's probably going to wind up back down in the range here. And finally, a short in Steel Dynamics. So, here's your go line. My initial hard stop probably up around, 34.09. I mean, if it gets up, you could, Goran's probably using something wider. He's probably up around 34.51 on this. Really kind of need to get up into at least here to get clear of some of this volume. I mean, the better stop is going to be 34.51. The sort of weaker money stop, 34.16. It just depends on, how much weight you want to put on what happened in here. There's a substantial period of consolidation, and since it bounced there before, right, let me change the color of this so it makes sense. Right, this is where, it came in the first time and it bounced higher, and then it traveled lower. I'm going to expect that if it gets back up into these highs, that 33.94 is really going to be a place that it bounces again. And then if it gets up to 34.16, I think I'm going to be done with it. So I'm going to put my stop there. All right, so that is listen, that's everything anybody asked about. So, I'm glad to do this. If this helps, just going through setting the stops and talking through the logic of why I'm looking at those things as stops, if that helps you guys, that's great. The VWAP thing still has people confused. In some software, then you're not going to be able to draw a fractional VWAP. You can't do an intra-session VWAP. You can only do it from the beginning to the end. If that's the case, then it's not going to be as useful a tool, but it's still useful, right? I mean, you can see it bounced lower, right from this level. And if you wanted to, and you were going to set up a fib trade on this, again, what you'd want to do is see, is there an overlap between a fib level and that VWAP? In this case, there's not. Or, that's the major move of the session, or is the second leg of the move, right, going to inflect right there? It does. It's not as strong an indication as having a fib retracement from open to close, but it's the meat of the latter part of the session's move. It's the big trending move going into the close. So maybe if this comes back up and we see some sector weakness on this, then we can look at taking the inflection entry. All right. Well, that's kind of a mouthful, and I just want to make sure that you guys are okay. I'm probably gonna change these back to Mondays. That really works better for me. Is if it doesn't work for you guys, I mean, we did it on Tuesday because a couple people said Tuesdays were really the best for them, and then they're not here. So Monday works better for me, just because this is a Tuesdays and Fridays are the days that Connor goes to school, and he goes to school down in El Segundo, so it's about 30 miles from here. So I drove him down there and I ran back, and normally what I like to do is just I like to go to my club down there and just work from the club. So I think I'm going to try to do them on Monday. All right, great. Hey, Denny, it's we'll do these every week. It'll be, right around the holiday is where, this stuff just goes off the rails because nobody shows up. I hate doing this when nobody shows up. But, as long as we get a room full of people and you guys are getting something out